Welcome to America's Commercial Real Estate Show, your source for intel, forecasts, and success strategies. Hello, I'm Michael Bull. I sure appreciate you being with us today. This segment's brought to you by BOMI.org, B-O-M-I. Look, if you're looking for a trusted source for property management or facilities management education, BOMI.org, they're really the industry standard, BOMI.org. Well, we have a great show for you today. We're going to talk about the top 10 issues affecting real estate. Now, this is an annual report, and it's put out by the Counselors of Real Estate. Now, this is a group of highly educated, very experienced commercial real estate people, and it's like a think tank. I mean, they really put their heads together and look at, hey, what's impacting real estate now and what might impact it long term. Please welcome my guest. It's Joe Nahas, and Joe is Senior VP with Equus Partners, and he's joining us on Skype. Joe, thanks for being with us.
Well, thank you, Michael. I'm happy to be here today.
Well, Joe, this is a great report, and we've been doing this year after year, and people really look forward to hearing about it and watching this video as well. And this year, you guys divided it up, right? Instead of the top 10, and it's really the top 5 in the current issues, and then it's the top 5 in really more of the long-term issues, right?
That's correct. It's new for us this year, likely to maybe continue in future years, but it really was a result of this notion that there were a number of things that our clients are telling us are things that they're thinking about today that'll have an impact today, and other things they're thinking about today that might take a 3, 5, 7 year period to have an impact, because as we know, real estate itself does have a long-term nature to it, and not everything is an immediate impact. So we split it in that way.
Yeah, that's great. So let's start with the current issues, the top 5, and let's start with number 5, and it's e-commerce and logistics. So what should we think about there, Joe?
Sure. Well, we all know and read a lot about this idea that technology and things going on in that space are very disruptive today to the retail space. But what's happening further is we're seeing that the retail space is starting to merge into the warehouse and industrial space in terms of how the physical real estate's being used and how people are actually buying things today. The idea of getting in a car and driving to the supermarket and then stopping into the drugstore and then popping into the card store, I think is becoming extinct. And we're seeing more often folks are spending time ordering online, shopping in a store and having it delivered to their home. And that's having impact for developers of space in terms of how they handle inventory, logistics, and so on. And so those are some of the things that we're seeing impacted on the e-commerce and retail front.
Yeah, and it's really disrupted a lot of retailers, but retail's a lot of times is very good real estate, if you will. So it also provides maybe some opportunities for redevelopment and maybe change in use, right?
Well, it does. In fact, what we've seen is that if you have a center that's well located in a good market, and you can provide an experience more than just again, place to park your car and pick up your groceries, you probably have an opportunity ahead of you. And so we see the space itself morphing into something different.
Yeah. And you mentioned logistics as part of number 5, and it seems like a lot of people are trying to get us consumers trying to deliver to us fast, right? Same day or really fast. So that becomes, is that an opportunity? Is that a challenge? What's the impact there for logistics as kind of that last mile mentality?
Sure. Well, the logistics aspect of it is not only that end of the delivery phase and how it gets kind of from the retailer into the consumer's hand, but it also relates to how the product is getting from the manufacturing distributor to the retailer. So we've seen an impact on marketplaces, particularly in the Southeast, as a result of the Panama Canal expansion and port developments in towns like Charleston and Savannah and some Texas ports. And because there's such a strong intermodal area down there, we see that the Southeast is really becoming a huge beneficiary, logistics-wise, in the space, more so than the Northeast, more so than even some Midwest locations, although there are some exceptions.
Yeah. Well, yeah, that's really interesting. I'm down here. My headquarters is in Atlanta, and we do commercial real estate brokerage in the Southeast, and we're certainly seeing a lot of benefit in the industrial world from that growth in logistics down here. So let's go to number 4. It's generational change and demographics. What should we think about there?
Yeah, so again, probably not a surprise that this shows up on the list. We hear a lot about the baby boomer generation. We hear a lot about the millennials, their generation, when we know now that their head count has actually exceeded the boomer generation. The impact is really the following. Developers, owners, investors actually need to think, they've been used to thinking a lot about the boomer generation in their decisions, design decisions, locational decisions, amenity decisions. And now they have this new generation of 75, 80 million plus that are moving into the decision-making time of the real estate decision-making time of their lives in terms of purchasing properties, starting businesses, renting space. And they have different tastes and preferences than their parents. And so developers now have to think about 2 audiences more so than they have had to in the past.
Yeah, that's right, because it used to be the baby boomers were the big group, right? And they're kind of losing their power, unless maybe you're in senior housing or healthcare.
That's correct. Yes. I mean, they still have something to say about certain aspects of it. But if you're a young company starting out, your office space looks different than the office space your father worked in, and so tenant demand looks different on the commercial side for the millennials than, say, as you point out in your example, Michael, than what an occupant of a senior living might look like.
Right. We're going over the top 10 issues affecting real estate with CRE counselors, and we're now on current issues 5 through 1, and now we're at number 3. And I think this is a real big one, housing affordability.
Housing affordability is a big one. It's related in a couple areas to some of the others that we'll talk about in a moment, numbers 2 and 1. But essentially, what we suggest about housing affordability is that it's an economic problem that can be solved, and I don't want to oversimplify it, but with supply and demand features. So, for example, we know that at any given price, if you increase the supply, at any given level of demand, if you increase the supply, you lower the price. And so this notion of affordability is an economic problem because we have a challenge with providing supply of affordable housing. And that is often a function of the fact that it is local governments and administrations and planning boards and so on who make these decisions about adding supply to their communities, and it's often a political hot button when it comes to things like density and design and so on. And so we think that unfortunately the politics might be getting in the way of having truly affordable housing solutions.
Yeah, I mean, it's a really big deal. I mean, if you're thinking about where to put your headquarters, you've got to really look at housing affordability. And you look at some of these apartment projects today, especially these urban markets, you've got to be making really 6 figures to really afford to rent a 1-bedroom.
Well, we could both recite the list of cities that would fall into, San Francisco. You made reference to the affordable housing being part of site selection. We know that that's a big part of Amazon H2Q site selection criteria, is finding housing that is affordable. So yeah, there are challenges with that, and unfortunately, our view from the counselor's perspective has been, it's been unfortunately too often tried to be solved from the political perspective as opposed to the economic perspective.
Yeah, I think this is a really interesting report you guys put out because, commercial real estate, you're buying the future, you're investing in the future, and you really want to think about what's really impacting the economy and commercial real estate moving forward. And down to number 2, we have politics and political uncertainty.
I guess you're not surprised this is on the list, right, Michael?
Right.
Actually, this was number 1 last year. So it slipped a ranking, but I suspect few would be surprised that it's going to be a hot button. You think about Korea recently, the summit. You think about tariffs and what's going on in even in the press today as we speak. The midterm elections, which are coming up in November, all of these things have an impact on what developers would be thinking about relative to their plans, what investors might be thinking about relative to their plans. Because again, real estate's local, politics are local, and so even though it's a national issue, from our government administration, the executive in Congress, it's also a local issue, and we see some risks associated with the political front at this point.
Yeah, I agree. I think there's risk, and there's also maybe some positive things going on with the political environment. And what do you guys think about the tax cuts and the impact there on commercial real estate?
Well, the early indications are that it's helping the consumer, and it's likely to be helping GDP out from the economic perspective. The flip side of that, quite honestly, is it's unclear as to what it's going to do to residential housing and the impact that the limitations on deductibility of property taxes and interest mortgage levels are going to have. So the jury's still a little bit out on the full effect of the tax cuts, but the early indications are that the tax cuts are positive on the consumption front.
And how about tariffs? How big are tariffs, and what's the impact there?
Well, the tariffs have a direct implication to the cost of production of real estate projects. So it's going to make its way into commodity prices like steel and lumber and so on. And when we're hearing people are already feeling those effects. So the bigger question is not will it be, but how long of a duration could that have an impact for?
Yeah, it's interesting to see what's short term and what's long term there. All right, we're down to number 1, and that is interest rates and the economy.
Well, probably again, no surprise that this would rank high on the list. I made this presentation last week to the National Association of Real Estate Editors on the day that the Fed raised rates another 0.25%. So I wish I could tell you my timing had anything to do with that, but it was purely coincidental. But the reality is borrowing costs for developers are going up. Borrowing costs for consumers are going up. The question that's still to be determined is what impact is this raising of shorter-term rates going to have on longer-term rates? Because at some point, if we find ourselves looking at an inverted yield curve where longer-term rates are actually lower than shorter-term rates, we know that that has been the strongest and most accurate predictor of a recession. And if we begin to see that later this year into 19, as some suggest we could, that would suggest we might be looking at a recession in 19 or 2020.
Yeah, I'd like to be in the room when you guys are sitting around and you're talking about this economy and the tax rates and the governmental impact. When you get to talking about the cycle, right? It's been we're a little long in the tooth here. It's the second longest great cycle that we've ever had. What do you guys think about how long the good times are going to last?
Well, that's in our business specifically, that's probably the question I'm asked most often by our clients, which is how much longer do you think this is going to last, and how much is it going to hurt when it comes apart?
Right.
And of course, it's hard to say. We don't see anything from a fundamentals perspective that suggests there's a high risk of it, kind of the wheels falling off the bus, so to speak. But if you put together a number of these things we've just been talking about, the political uncertainty, the interest rates, the changes in the demographics and so on, and you start to package it, those things in the aggregate could start to see a shorter timeline on what has been this long expansion. And I think most economists, and we have a number of them who are counselors, would suggest that something over the next 18 months is likely to give, and we'll see some slowdown.
Okay. And you talked about rising interest rates. We all are thinking about timing the market and when's the best time to sell, and maybe if we're building or developing now, what's our exit cap rate as we're planning. So what would you guys say if I'm in the room with you guys and I'm saying, all right, 2 years, let's fast forward 2 years based on what you know today. In 2 years, what do you think this rise in interest rates and the economy would do to cap rates? So if I did have a 6 cap rate property today, what might I want to think about 2 years from now?
Sure. Well, if your borrowing costs are going up, and all other things being equal, meaning you don't have any excessive inflation or inability to raise your rents or reduce your expenses, so your NOI is not going to change much beyond normal inflationary impacts. I think the likelihood is that your cap rates will certainly stop falling and settle and may begin to rise as well. It's probably not going to be as dramatic as we've seen the number of interest rate rises recently, and perhaps 2 or more to come. But I think it's hard pressed to make the case that cap rates will continue to fall. It's just a question at what point do they level out and begin to turn upward.
Yeah. And we're seeing some level now, and we're seeing in single tenant net lease where we're experiencing some rising cap rates. So, you know, what would you guess a cap rate might be 2 years from now? Should we expect a change, or are you thinking it might be flat for 2 years?
I could see it moving, but it's probably moving in the 25 basis point to 50 basis point range. I don't see the fives becoming north of 6 all of a sudden in the next less than 24 months. Okay. But I could see fives becoming 5.5s, 5 3/4. Sure, in 18 months, I could see that. Again, it depends upon the space. I'd be less certain on that on the multifamily front, where I think just the tightness of the markets and the amount of capital that's out there, that might lag. The turnaround in cap rates there could lag some of the other space.
Yeah, it always depends on the class of property, the asset, and the location. Well, all right, we're going to take a short break. When we get back, I'm going to ask Joe about the longer term issues impacting real estate. They have a top 5 there, so stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.